JP Morgan is one of the most powerful banks in the world. Most people know about their lending business and stock trading, but what many people do not know is what they do in the silver market. The story of JP Morgan and silver is a story that shows power and strategy. It shows how one bank can shape an entire market. This story is important because silver affects many people. It affects investors, it affects industries, it affects regular people like you and me. Let me start by telling you what JP Morgan has done in recent years. Between June and October of 2025, JP Morgan made a shocking move. They sold off their entire 200 million ounce short position in silver. This was huge. Then something even more shocking happened. They flipped their position completely. They became long on silver. This means they switched from betting that silver prices would fall to betting that silver prices would rise. This move was historic. For the first time in history, JP Morgan is long in both physical silver and paper silver contracts. No one had ever seen this before. But the real story starts long before 2025. To understand what JP Morgan is doing now, we need to go back in time. In 2008, there was a huge financial crisis. A bank called Bear Stearns collapsed. JP Morgan bought Bear Stearns. When they did this, they also took over Bear Stearns' silver position. This position was massive. It was a huge short position. This means Bear Stearns had been betting that silver prices would fall. When JP Morgan took over, they inherited this position. Many people believe that JP Morgan then used this short position for an unusual purpose. They used it to suppress the price of silver while they bought physical silver quietly. Let me explain what this means. When you short something, you are betting the price will go down. You sell it, hoping to buy it back later at a lower price. So JP Morgan had a massive short position. This means they sold huge amounts of silver on the futures markets. The more they sold, the more the price went down. But at the same time, JP Morgan was buying actual physical silver. They were buying it quietly through the silver ETF called SLV. They are the custodian of this ETF. A custodian is the person who holds and protects the assets. So JP Morgan was in a unique position. They could control the price down through their short selling. Then they could buy physical silver at these lower prices. Then they could profit when the price eventually went back up. This is a brilliant strategy, but it also raises serious questions. Is this legal? Many people and experts say this is market manipulation. They say JP Morgan has used their power to break the rules and make money unfairly. Let me talk about the numbers. Since 2011, JP Morgan has accumulated between 100 and 200 million ounces of physical silver. But recent reports say they now hold 750 million ounces of physical silver. This is the largest amount anyone has ever held. This is almost a year's worth of global silver production. Think about that. One bank holds as much silver as the entire world produces in a year. With the recent 2025 moves, JP Morgan now controls about 40% of all COMEX silver futures contracts. The COMEX is the biggest silver trading exchange in the world. Controlling 40% is enormous power. How did JP Morgan buy so much silver without anyone noticing? The answer is through the SLV ETF. SLV is a silver fund. When people buy shares in SLV, they think they own silver. But the silver sits in JP Morgan's vault. JP Morgan keeps it safe, or that is what people believe. What people did not know was that JP Morgan was constantly buying and selling inside SLV. There was huge churning of the silver holdings. This is when you buy and sell things very quickly. The total amount stayed about the same, but large amounts were being moved. This allowed JP Morgan to buy massive amounts of silver without showing it on their books. You want to create the false impression that there is much more silver available than there really is. This tricks people into thinking the price is going down, so they sell. The price falls. JP Morgan then cancels their order and makes money. In 2023, two of JP Morgan's own traders were convicted of spoofing. Their names were Michael Nowak and Greg Smith. They worked on JP Morgan's precious metals desk. Between 2008 and 2016, they engaged in tens of thousands of deceptive trades. They placed orders for gold, silver, platinum, and palladium futures. Then they canceled them. This happened thousands and thousands of times. The goal was always the same: create false information, make the market move the wrong way, then profit from it. Both men were convicted and sent to prison for their actions. JP Morgan also uses another tactic called price slamming or price tamping. This happens almost every morning during New York trading hours, specifically between 8:30 and 11 a.m. When silver is trying to break above a key price level, JP Morgan floods the market with sell orders. These are not small orders. These are enormous orders. Thousands of futures contracts all at once. The price crashes down. Sometimes it falls $1 or more. The goal is to break the momentum. If silver starts rising strongly, people get excited. More people want to buy. This can create a snowball effect. JP Morgan wants to stop this. So they slam the price down. This demoralizes buyers. It discourages new investors. It keeps the price suppressed. There's another important piece to this puzzle. JP Morgan's position creates what we call a feedback loop. A feedback loop is when something feeds into itself and gets stronger. Here's how it works. JP Morgan has a massive short position. The COMEX futures price is the global reference price for silver. When futures prices fall due to JP Morgan selling, the physical silver price falls too. This is because people use the futures price to decide what physical silver is worth. So JP Morgan's short selling pushes down the physical price. Now physical silver is cheaper. JP Morgan buys more physical silver at this cheap price, then they sell more short contracts. The price falls more. They buy more physical. It is a circle. Each move helps them accumulate more physical silver. But JP Morgan is not alone in this game. They work with other banks. HSBC is another major player. During 2008 and 2009, JP Morgan and HSBC controlled over 85% of the commercial short position in COMEX silver. That is incredible. Two banks controlled most of the short side of the market. This gave them enormous power. They could move the price almost any way they wanted. Smaller traders could not compete. There is actually historical precedent for what JP Morgan is doing. In 1979 and 1980, two brothers named Hunt tried to corner the silver market. The Hunt brothers were not banks. They were just wealthy individuals. But they tried to do something similar to what JP Morgan is doing. They accumulated large amounts of physical silver. They also bought silver futures contracts. And the idea was to squeeze the market, make the price rise very high, then sell at huge profits. For a while it worked. Silver rose to nearly $50 an ounce. That was an enormous price at the time. But then the government stepped in. Regulators decided this was market manipulation. They forced the Hunt brothers to stop. They could not add to their positions. The government froze their credit. The Hunt brothers could not pay the margin calls on their futures contracts. They went bankrupt. Silver price collapsed. JP Morgan learned from the Hunt brothers' experience. This is why they are different. They are not buying paper silver like the Hunt brothers did. They are buying physical silver. Physical silver cannot be controlled or frozen by the government the same way. Paper contracts can be canceled or frozen. But if you own the actual metal, it is harder for government to take it away. This is JP Morgan's brilliant strategy. In 2020, JP Morgan had to pay a heavy price for their activities. They were fined $920 million. This was for precious metals manipulation and fraud. The fine came from multiple regulators at once. The Department of Justice, the Commodity Futures Trading Commission, and the Securities and Exchange Commission all fined them. This was a major settlement. But for a bank as large as JP Morgan, $920 million is not that much money. JP Morgan makes billions of dollars every quarter. So the fine was like a small fine for a regular person. It did not stop their behavior. In fact, they continued manipulating markets even after the fine. Now let me talk about the silver ETF called SLV. This is crucial. SLV is where many people store their silver. They think they own silver. The reality is more complex. JP Morgan is the custodian. The silver sits in JP Morgan's vault. JP Morgan holds the physical metal. When JP Morgan wants to add to their silver holdings, they simply add it to their vault. They are the one keeping track of the numbers. No one else can easily verify if the numbers are correct. No one can walk into their vault and count the silver. We have to trust JP Morgan's word. But JP Morgan has already been caught manipulating markets and lying. So should we trust them? Many people say no. In late 2025, something changed. The US Mint announced they were running out of silver coins. Physical silver supply was becoming tight. At the same time, JP Morgan made their huge shift. They went from short to long. What does this tell us? It tells us that JP Morgan believes silver prices are about to rise. They believe the supply is going to get much tighter. They believe owning physical silver will be very profitable. They have inside knowledge. As a bank, they see things that regular investors do not see. They know about industrial demand for silver. They know about shortage concerns. So they positioned themselves ahead of time. Then they told the world that supply is getting tight. Now we must talk about how serious this situation is. Silver is actually incredibly important. We do not think about it much, but silver is used in many industries. It is used in electronics. It is used in solar panels. It is used in electric vehicles. The demand for silver is rising because of technology. Climate change solutions need silver. The green energy transition needs silver. The world is producing about 1 billion ounces of silver per year, but estimated above-ground silver supply is only about 1.5 to 2 billion ounces total. Compare that to gold. There's estimated to be about 200 billion ounces of gold above ground. Silver is much scarcer than gold relative to its use. Now, JP Morgan holds about 750 million ounces of physical silver. This is about half of all above-ground silver supply. This gives them extraordinary power. They can influence prices. They can create shortages. They can move the entire market. A single bank should not have this much power over a critical commodity. Let us talk about what JP Morgan could do with their silver. First, they could create a supply squeeze. By holding so much silver, they reduce what is available in the market. If JP Morgan does this, silver could reach very high prices. Some experts think it could reach $600 an ounce when adjusted for inflation compared to 1980 levels. Second, JP Morgan could just wait. They're a bank. They can hold silver forever. Eventually, as silver becomes scarcer, the price will rise. They just sit and watch their investment grow. This requires patience. But JP Morgan has the money to wait. Third, JP Morgan could sell gradually. They do not have to sell all their silver at once. They could sell slowly, taking profits as they go. This prevents them from crashing the market while they sell. They get maximum value. There are risks for JP Morgan too. If they are caught holding too much silver, regulators might step in. The Commodity Futures Trading Commission has position limits for good reason. These limits prevent any one entity from controlling a market. If JP Morgan is found to be violating these limits, they could face penalties or forced position reductions. There is also the question of regulatory response. Some regulators are becoming aware of the problems. Proposals are being made to increase position limits. Better surveillance systems are being proposed. International regulators are coordinating with each other. If regulations tighten, JP Morgan's strategy becomes riskier. We must also consider the moral questions. Is it fair for one bank to manipulate a market so badly? Is it right for them to suppress prices for their own profit? Is it acceptable that they use their position as custodian of an ETF to secretly buy silver? Many people say no to all these questions. Many people are angry about what JP Morgan has done. Online communities have even started campaigns asking regular people to buy physical silver to crash JP Morgan. These campaigns may not work in the way people imagine, but they show the level of anger and distrust. The silver market has changed dramatically.